The silver stockpiles in the COMEX, and especially the LBMA, are in the danger zone. Let's explore! The numbers being released for November's stockpiles of silver are alarming indeed, and we know this, but the eligible versus registered stocks numbers for December and the weeks that have passed are very alarming. And how do we interpret these data? Well, Shift Gold has a piece that talks about this, and we're going to go through it and then make a conclusion that I think is not too far off base. I'm not quite there yet, but nonetheless, we are in trouble, I believe, if this trend continues with the stockpiles of silver and even gold to some extent, but also platinum. We'll get to that as well. If you enjoy videos like this, I hope you will consider pressing the thumbs up button, subscribing to the channel, and stay tuned for daily videos on the precious metals markets. So here we go. This is a very recent piece from Shift Gold. The drainage of silver from the COMEX vault since the start of the year has been nothing short of spectacular. And they're going to look at this. Before we get there, we must define what is registered versus eligible stocks, because some people could get confused between the two. Look at it this way. Registered equals assigned and can be used for COMEX delivery right now. In other words, it's ready to go to be utilized for delivery. Warrant assigned and can be used for this delivery. The eligible is that there is no warrant attached to those. And the warrant, the owner has not made it available for delivery yet, so it's not been claimed. So one can maybe even consider it as being claimed or unclaimed. And so think of registered as being claimed and eligible as being ready to be claimed, but not there yet. And we saw gold. Gold is not an alarming low in the COMEX or LBMA vaults. In fact, it's over the last years, it's gone up dramatically over the past 3 years. But even its stockpiles are falling. But we're going to take a look at silver. But you can see the trend line, because where gold goes, silver goes also. But in this case, much more silver is leaving those vaults and going into the hands of the Indians, especially in India, but in other places too. Part of it, I believe, is coming to us in the form here. This is silver that is not on the COMEX or LBMA. There's been a lot more precious metal stackers, and especially silver stackers, that we have seen over the course of the last 2 years. And that, in my view, is great news and remarkable. The supply of silver has been shrinking even more than rapidly than gold. The drainage since the start of the year has been nothing short of spectacular. 48.5 million ounces have left the registered or claimed category since the 1st of January. That represents more than 50% of the balance of 82 million ounces since last December 31st. And after all the stress of the system, the COMEX was only able to add a net of 300,000 ounces of metal so far this month. But it's being outpaced by the registered flow. Much of the inflow came at the beginning of the month and has already been leaving since. It's very likely that by the end of December, the net change in inventory is actually negative. Think about that. The net change could actually be negative by the end of the month. There's another major indication that shows inventory might be much smaller than as reported. As of a couple of days ago, only 77.6% of the contracts standing for delivery have actually had their metal delivered. So just over 3/4 of it have had their metal delivered. Shorts are on the hook of deciding when to deliver the metal. So why are they dragging their feet? Through the 16th of December, this is the least amount of metal delivered as a percent of open interest on first notice back to at least of January 2020. And, that was before the crap hit the fan in terms of the pandemic. Another odd data point is the number of new net contracts after the first position. There have been some months, like in last July, where the new contracts are negative throughout the month. However, while this month is still positive, it went up and then reversed back down. This means that there are cash settlements happening way late in the contract. So, that's just it. The stockpiling of the silver, leaving those vaults, and with these cash positions is quite interesting to see, for sure. So why does this happen? If you look back at the vaults, and there's looking at, there's some data that they show and what's been happening. Gold over the last month has seen a net inventory decrease of 2.6%. It's being driven by 1.2 million ounces leaving eligible versus only 608,000 ounces being added to registered. So since last year, the total amount removed exceeds 10 million ounces of gold. Whereas silver, it continues to see registered supplies fall, with 1.6 million ounces being removed over the past 30 days. Eligible took a beating in the last week, dropping to almost 2 million ounces. Palladium and platinum are much smaller markets, but that may be where the market breaks first. So a break in the COMEX or LBMA very well could happen with platinum. Platinum inventory is down 12.1% over the last month as it prepares for a January delivery month. It will not take many contracts standing for delivery to fully deplete platinum from the vaults. That means that it could break. That would be a breaking of the COMEX if that were to happen. Silver's not terribly far behind that. But platinum, as we know, as I reported recently, as platinum, China is buying up almost practically all of the amount of platinum used for industry and the like, as reserves. And so that is interesting to see. You look at gold, especially over the 3 years, gold is actually up, but it's still being depleted year over year since that increase. But platinum and silver especially down dramatically, and especially over the last couple of years here from tables that they show there. Silver has seen some big moves over the last month. Memphis increased supplies by 4 million ounces or 40%. And Delaware also saw supplies increase 2 million ounces or 5%. JP Morgan was on the other side, losing 3.8 million ounces. INT Delaware saw 264,000 ounces disappear, which was 21%. And if you zoom out and look at the perspective, look at the inventory for gold and silver, shows you just how massive the current move has been. And we saw over the past 3 years massive increases there and dramatic drops since then, especially for gold. And as gold December delivery has started, the register quickly moved from 45 to 50% of the total inventory. A lot of very big moves happening in the COMEX right now. Despite silver seeing a net increase in inventory over the month, registered continues to fall. Again, registered is the one that's claimed. It's not eligible. That's the one that's important. The stuff that's going out the door. It's marked for delivery. The silver registered ratio reached as low as 11.1% of the total inventory on the 7th of December. This is important. This is the lowest the ratio has been since at least January of 2000. The old low was 14.7% back in December 2016. The full history really demonstrates the magnitude of the current move. Remarkable. And so that is kind of where we are at. And historic registered keeps going down and down and down. And then the available supply for potential demand. This fall in inventory have had a major impact on the coverage of COMEX against the paper contracts held. There are now 3.6 paper contracts for each ounce of registered gold with the COMEX vaults. This is down from the recent high of 4.5 seen in November. Coverage in silver is far worse than gold, with nearly 18.3 paper contracts for each ounce of registered silver. This is down slightly from the recent high, with coverage was as thin as 20.4 paper contracts for each physical ounce in mid-November. By the way, this does not include ETFs, just so you understand. That number is much higher than this. This means it's a bit more than 5% of the silver open interest would need to stand for delivery to wipe out the COMEX entirely of registered. Wow. Think about that for a moment, folks. Just a little bit more than 5% of silver open interest would need to stand for delivery to completely just abolish all of the COMEX silver register, marked as registered. So, in summation, the physical demand for gold and silver has continued unabated for months. In December, this is the first month where the net flows have slowed, which is ironic given the historically strong delivery month for December. Let that sink in too. That's a pretty big news data point here. So if you take the data hat off and put on the speculator portion or hat, this is what they think over at Shift Gold. Now, and again, this is what they think. I don't know that I necessarily buy all of it, but this is interesting. Inventories are much thinner than the data show. We have perhaps reached the bottom of metal available for delivery at current prices. This is why silver is seeing so many contracts remain unfulfilled, and why we have also seen a dip in new night contracts this late in the delivery window. There's simply no metal available, so it is not being delivered. And that's where I differ from them to a point. I think new metal can come in. It's being mined. It's been the third quarter of some of the major silver miners have been up to record highs. I've covered that, and it may not come until January, but I think that's when we're going to probably see it, where the LBMA and the COMEX very well could be saved. That's my prediction. Now, could it happen? May it not happen? There's potential it couldn't happen if demand really keeps going, but they are, in a sense, preparing for this. It's just a little bit late to the game, and it's not really showing in the numbers. And that's my theory. But gold is a few months behind silver and also a deeper market, but the same trends are starting to emerge there. So the theory could be put to the test as soon as the end of December, and we'll find out for sure. Platinum is facing its major delivery month, and with very limited supplies available. That's another reason why I'm so bullish on platinum, by the way. If someone wanted to stress the COMEX system, they could easily stand for delivering amounts exceeding what's available. If I had to bet, though, I don't think the COMEX will break on platinum. What they are saying is that they'll be watching is what tricks are used to satisfy demand. It can manifest itself in the data in multiple ways, like cash settlements, a larger dive into close, etc. Whatever happens will likely be a preview of what we can expect in silver and then gold in 2023 and 2024. And really, basically, they're saying that the fix is in, or they'll be able to do something to using the data to satisfy demand, whatever cash settlements and what have you. But nonetheless, this is sort of a squeeze on the supply in both of these institutions. So we'll see how it plays out. Let me know what your thoughts are in the comment section below. Hope you found this video insightful and useful. I'd like to extend a multitude of gratitude to you all for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.